Alrighty, good morning, everybody. I've got the recorder running. I'm ready to go. Hey, this is Tuesday, June 25th, 2024. We're almost into July. I want to welcome everybody here today. Exciting Tuesday, right? Something like that. We could make it that way. Exciting Tuesday. So, where's the market at right now? And I think this is one of the good charts to look at. I like it. Somebody might ask, well, where's the candlesticks? Where's the price? Well, we don't need it for this. All we want to do with this chart right here is really just see the direction, both a little bit longer term as well, longer term, as well as maybe more current, like right now. And that's what I see right now. We don't need candlesticks on there. Because if we start looking at candlesticks, what happens is we might see one that is maybe might impress us more one way or another, bullish or bearish. And don't get me wrong, please. I love candlesticks, but they can be a little bit kind of tricky sometimes. And you might try reading something into one or a pair of them that's not really there. Or you swear up and down, this should go this way because of the candlesticks. Hey, you could be right, but then everything turns wrong. I have found that trading to trend is a little bit better. And then you trade within that trend. My trend consists, everybody here knows it, of the 17 EMA, all right? By the way, I get enough emails and private messages and enough comments that one of these days, I'm just going to change that to like the 20 or 21 because I get an awful lot of people say, why don't you use the 20 simple or the 21 exponential? And the truth is, I just want to be different. I mean, that is really, really the difference. But using that 20 simple or 21 exponential would be perfectly fine. I don't know that you would know the difference. If somebody came into my office behind my back and changed that to the 20 simple or 21 exponential, I would never know it unless I looked at, up here where it was changed to. I would never know it. The T line, the white line, right here, and then that's the 3 EMA. You see how the 3 EMA is above the white line? The white line is above the green dots. That's bullish right there. We've got 3 EMA, T-line, trendicator. Now, that's bullish. We're having this pullback. This is just a simple little pullback until it's not. Okay? And it can get to where we're bearish. Absolutely. If you take a look at right in here, look how we started down. We could have got real bullish, but what happened, this turned into an awesome buying opportunity. An awesome buying opportunity. Now I know, and you may be one of these people that we got down into here. You got some ugly candles in there. You got short, and you got your butt handed to you on maybe a trade or two, and then you got right back long. Well, what I'm suggesting is let's let the breakdown actually occur. Break that trend. We actually never broke trend here based on this trend. Okay, somebody could draw lines in here, and I'm sure that, you can find where, well, it did break trend. Well, that's your trend. Okay, so learn to develop your own style of trading. Chuck there says, pick one and stick with it. Exactly, Chuck. Exactly. Pick one and stick with one. And that's, the same with, drawing trend lines. Do it the same way all the time. Don't try to get fancy. Keep it simple. So right now I'm still bullish on the SPY. If I take a look at the diamonds here, see how the diamonds right here, now we hammered down hard right here, but we really didn't break down until over here. Because I know this time it broke down, but it could have just as easily been a sweet bullish buy and gone up. But what happened is now you can follow that price action below the trend. And here we are down. Well, now here we're sideways, and look what's happening. Aren't we starting up? Could this turn out to be one of those sweet buying areas? It could be. Could be. And now we're bullish based on this trend until we're not. And when we're not means when the yellow and white gets through the trend indicator here. Now that doesn't mean that you're holding on to a position and you yesterday you were green and today you're red, and say the diamonds start to come down and you're in a separate position and you're getting red and the diamonds are looking pretty red here, right? Well, here's you up here and here's the diamonds, and it's pushing down. I mean, don't try to be a hero or anything. If you see it moving down, manage your trade. And if it does turn around and come back, you can always get back into your trade if you need to. So, but if if you manage your trade properly, you got out, and then we came back down, you're ahead of the game. Even with a loss, you're ahead of the game. Small losses are better than big ones. So take a look at IWM. Oops, what's going on here? IWM. See, no go yet. Not in that bullish territory, is it? So see how we got bullish here and started rolling up. See how we started seeing weakness in here. Well, that's where the trend broke down. Right in here. Short until it gets sweet again to the long side. Excuse me. Let's get back over here. Let's take a look at some charts. XLP was popping up on the scanner this morning. And what I like about XLP, is this pattern right there. Now, candlestick connoisseurs are going to shake your head, but to me, that's a morning star signal. It's the same pattern as what a morning star signal would be. We could probably, go to a 2-day chart and you can make it look a little, if you are a book fanatic and if you go by everything you read in a book, then there's your morning star signal. So what I like about it is we came up, we went up a little bit, we popped to the downside, and then we put in a bullish engulf here. I'm still going to stick with that morning star signal. And right there, see where we broke out? Over 77.70 there. That's what I would look at being bullish here. So I'm considering a buy in this area right up here. Looking forward to move up further into the 80 plus area. Uber. Now we bought some Uber yesterday. I believe a few folks here in the room bought some Uber yesterday. Some folks are going to wait till it breaks out. That's perfectly fine. It's all, you've got to develop your trading style. So, like I say, we bought some Uber yesterday, doing well on it. Sent alert out to members. It looks like it's popping up this morning. What we've got here is a nice J hook setting up. Pop up like this, and then there's your J hook. J hook is just a continuation pattern. A good way to look at a continuation pattern, maybe in the beginning without price, is just follow the trend indicator. Look at the trend indicator. And then all of a sudden, you see how we come down. There you go, right there. Beautiful J hook setting up. Now, it won't become an official J hook breakout until it in fact breaks out of about the 73 area. So that's what we'll be watching for. And then what we're going to be looking for is price, to continue higher on this. So Uber's looking pretty good for now. Let's talk about some Apple. Now, I kind of want Apple to move down in this area, a little bit closer to the trend indicator for an entry. I want to buy it. I like what Apple is looking like. I had somebody email me yesterday that Apple is looking bearish to them. I asked them why, and I've not heard from them, but I'm sure I will hear from them today. What I see is a nice trend up, on price. Look at the trend on the trend indicator here. And then I've got this pullback. I'm looking for that J hook. Now, their comments, the first email that I received, still waiting for the second. First one I received is it doesn't, they don't think it's going to come, they don't think it's going to roll back up. They think it's going to sit here, wobble, and then maybe roll down. And that absolutely might be true. That absolutely might be true. But right now, the trend is up, and I'm going to go with the trend until it's not a trend. Price action is stabling here. We've got 3 days if you want to count today, a little bit of stabilization today. So you've got 2 days here for sure that it's stabilizing right in here after this rally up and pullback. So I'm going with what's in front of me, not my gut or not, oh, Apple, sucks pond water these days, or, how somebody might think. It's just the chart. Just trade the chart. It very well could fail. But that's not what the chart is saying at the moment. I think that's what somebody's gut is saying. Take a look at BMY. That's another one that I own here. I think a few people own it. Why can't I make that happen? BMY. There we go. I'm pretty confident that I'm going to be adding to my BMY here pretty quick. It's looking to me like it's poised to pop over that 50-period moving average. We've got a double a bottom, a very nice hammer, gap up, acting really good here. We get through this top right in here, then we're going to have a bullish W pattern working, just like that. So we take out that top. That puts us over that 50-period moving average. A little bit of normal, chart moving around. And then I think that puts us up into the 46.95. If we just take this top right here, if this is our, if we consider our trade, what is our trade? And we start breaking down everything, excuse me. Here, let me put this on a weekly, all right? Somebody could say your trade is this top. Now, I think that's unrealistic for my style of trading. I think that's very unrealistic. So what would be realistic? Well, I like this top right there. Let's go back to daily now. I like that top. I think that's realistic. And I'm not saying realistic, that's where I think it's going to go. I mean, it could go there, but not in my time frame, all right? I know me as a trader, and that's not me to wait that long. That doesn't mean it can't go there. So what I want to do is I like that top because that fits my world as far as dividing it up into equal parts. And right there is the 50% retracement. So if I like that top, put that on the bottom, find that 50% retracement, and that becomes a major, major target for me. So, that puts us in the neighborhood of 11% move. And then evaluate from there. I mean, if you want to trade it more, you can, but, set that trade up like that. I hope that made a little bit of sense. Let's talk about NVIDIA real quick. So NVIDIA put in a bearish engulf up here. We had some follow through. It's pulled back. Just a simple trend line, and we're trying to lift up in here. So is NVIDIA ready to be bought again? What I would do is probably let NVIDIA prove itself a little bit in here. I would let it prove itself. I don't think buying the very bottom of NVIDIA is necessarily the best thing in the world to do. NVIDIA is one of these where if it gets to cooking, it'll cook. Okay, it'll cook. So you don't have to jump in real quick because it's only going to go part way. I would let it prove itself that it can get somewhere, and then I think we have a trade there. So anyway, that's what I see. What time is it? Yeah, probably time for me to go here. Really quick, I see on the scanner GM, I know was bought by several people here in the room, and it's looking pretty good. Visa breaking out of that downtrend line right in there. Also, we want to keep our eyes on some energy today. There may be some energy charts that we might want to pick up along the way, okay? All right, everyone. I'll see you at the bottom of the hour when the market opens up. Let's try to hit the ball out of the park today. Put some money on the table. Thank you, everyone, for sharing your trades, both winners and losers. Appreciate that. Thank you also for sharing when you're buying something. It's very helpful to the entire group of Hit and Run Candlesticks. Thanks a lot. See you guys in about 30 minutes.